I spoke earlier about Alibaba's share price actually coming down quite a bit as a result of people being a little bit concerned about the geopolitical risks surrounding the name with higher tensions between the US and China. But the question is, what I always like to look at is what sort of like opportunities are the options providing us in this environment? Because you could, potentially generate a decent return with a very, very low downside risk. And so that's what I want to look at in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and let's dive right into this, and let's start with the cash secured put opportunities. So you can see here, these are the January 19 cash secured puts as of close yesterday, and you can see that the $70 cash secured puts are yielding, around $5.60 per share, and the $80 cash secured puts are yielding around, $9.50 per share, and the current share price for Alibaba, at least as of the recording of this video, is around $83 per share. And so before I get started, I just want you to know that in the description of this video, there is a free options calculator that I provide to you guys. And the reason why I provide to you guys is I want you guys to sort of like learn how to sort of like price cash secured puts from a risk and return perspective, but always focus on the downside risk, because that's the most important thing. I think a lot of people got caught up with how much money they could make, and they ended up losing quite a bit. And so, none of this is of course investment advice, but it's more just trying to like teach a man how to fish type of thing, and so here's how I typically look at it. So of course, all the blue cells are where you enter in the information. And so, you just saw the $80 cash secured put with a premium of around $9.50, and the exercise date is January 19, 2024. So that's less than a year until strike. So of course, the current yield is around 12%, but when you annualize that, you actually get an annualized yield of 16%, and that's because you have to spread that 12% over fewer than 365 days. So that's why that's happening. But notice that, when I look at this opportunity, a 16% return annualized is not bad. And, I say that right here, but I want a lower net purchase price. And the reason for that is because, we have a net purchase price here of $70. When you compare it to like around what most people are kind of valuing Alibaba at, which is around that 225, you see that it's, the valuation is around 30% of its intrinsic value, or what people believe that its intrinsic value is. This is not a price target by any means, but the issue is that a lot of people who follow this channel know that I've doubled down on Alibaba. I did that maybe, I don't know, it feels like almost like a year ago. And then what it was I sold the hundreds for a $30 per share premium. And so, the net purchase price on that is already $70. And so I would look for, or I would want something much lower than that, maybe in the 60s, even into like the mid 50s is ideal for me. And so this one I'm going to pass on because I've already sold something similar to it. Now going down the chain a little bit, you can see the $70 cash secured put with a premium of $5.60. The net purchase price is not bad, it's in the 60s, but the yield is not really there for me. Also, the net purchase price is not really there for me. I'd like it to be much closer to 60, even into the 50s. And so, this one, the $70 at $5.60, not really my cup of tea. So I'm going to walk away from the January 19 cash secured puts for 2024, and let's see what other opportunities there are. Now, because we're into 2023 already, the 2025 cash secured put opportunities are available now. And so I was looking at the 70s and I was looking at the 80s. And so, you see a nice premium with the 80s. You're also seeing a decent premium with the 70s. But once again, we have to annualize this because it could look good on a current premium, but it may not necessarily be a good premium on a annualized perspective. And so we got to take that into consideration. And so with the $80 cash secured put, which has an exercise date of January 17, 2025 and a premium of $13.75, you can see that it has 632 days until strike. So the current yield of 17.19% actually has to be spread around amongst more than 365 days. So the annualized yield is actually lower. It's around 10%. So the yield is not great right off the bat. And then the net purchase price, once again, this is not that great either. It's too close to $70 per share. So, I'm going to walk away from this $80 cash secured put that has a premium of $13.75. So see, here's an example of how a cash secured put looks very delicious with a 13.75 premium on just $80 of a strike price. But when you really analyze it and break it down, you're not really making that much money. 10%, it's not bad, but it's not great either. And the net purchase price if you already have something that you sold at around $70 per share, this is not super exciting. So looking at the $70 that yield $9.50, well, you can see once again, because you're going lower on the curve, of course the annualized yield is going to be lower. And if you don't understand that relationship, just download that cash secured put model and just start going down the curve on cash secured puts. Like do the $80, then do the $70, then do the 60 and the 50, and try to understand that relationship. That's really the best way that you're going to learn this. And so I really love the net purchase price here, but I don't think the yield is there. I don't want to sit on 8%. If that was closer to like 12.5, maybe maybe I'd consider it, but even at that point it'd just be a little bit low. There's a lot of more there are a lot more attractive opportunities in the market right now. So for Alibaba, the 2025 cash secured puts don't look like a great opportunity for me as the current premium relationships look. But now let's look at one of the covered call type opportunities. And so you have the January 17 2025 covered call opportunity. So you have $85 per share with a premium of $20 per share. So right off the bat, you can see that the net purchase price would be around $65, closer to what I was expecting. But once again, I still want to see it much closer to 65. But let's take a look at what the yield looks like. So you can see here that, the $85 strike price, and you got the $20 premium, and you have the appropriate date here. So you can see that the annualized yield is actually 15.37. So that's not bad. And you know what? Actually, I was wrong, because with covered calls, you buy the shares at their current share price, which is right here, $82.93. You actually get that $20, or the $82.93 less the $20, so your cost basis is actually $62.93. So that's not a bad cost basis, and so it's looking good. But if I could get this at a premium of $25 per share, and so the cost basis, the net purchase price goes under $60 per share, and I get a slightly higher annualized yield, I'm going to be in. So this is the type of opportunity I'm looking for. It hasn't come yet, and you know what? Probably once again, Alibaba's shares will start surging again, and I'll miss out on the opportunity again, but that's fine. I'm happy to remain very, very patient, at least in this situation. And so I want to give you an example of exactly something that I would jump on top of. So like I said, the $22 or the $20 per share premium is not what I'm looking for, but this is the same cash secured put that you just saw, just I increased the premium to $25 per share, and the current share price relationship is the same. Now this won't actually happen. I don't think it would happen, but you can see that the annualized yield is closer to 19%, and the net purchase price is under $60 per share. So this is what I'm looking for looks like. Worst case scenario, if Alibaba's share price continues to decline and I'm not exercised on this, well, it's still not a bad position to be in, because my net purchase price is significantly under $60 per share. Now, playing with cash secured puts isn't for everyone. I totally get it, but this is just sort of like how I look at it, how I manage my portfolio. You guys let me know if you do something different. Now, the other thing is, I provided you that, estimate of what the Alibaba share price is, or the valuation is. But what I do? I actually build a model, and I work through sort of like what I think Alibaba's intrinsic value is. And you can actually get access to that model at the lower tier of the Patreon. And so, you don't just get access to Alibaba's model, you also get access to Tencent, you get access to Microsoft, to Alphabet, etc. There's tons of companies in there. And so if you haven't tried it, please take an opportunity now and try it. Now, the other thing that I want to make you guys aware of is that the best value on this channel is that Q&A series that I've been slowly building out. And if you haven't seen any of those videos, no problem. You can get access to the whole Q&A series right here.